Welcome to Futures Now. I'm Courtney Reagan, filling in for Jackie DeAngelis. That's the NBC Global headquarters. Today, we've got a very special show for you. Ahead of the market's first big test of the year, Donald Trump's inauguration. It is coming up tomorrow. Jim Urio and Jeff Kilberg are your traders today. They join me from the floor of the CME in the Windy City to give their market predictions for Trump's first days in office. Here's what's coming up on the show. Crude oil getting whipsawed by shifting signals about the supply situation, but is it about to rise to new two-year highs? Plus, one market strategist says the Trump rally could already be over. Bill Stone of PNC Asset Management Group will make his bearish case. But first, with the inauguration tomorrow marking the Trump administration's beginning, what will it mean for the markets? Let me welcome in former representative and presidential candidate Ron Paul. Congressman, thank you so much for joining us. Appreciate you being here today. First of all, are you going to the inauguration?
No, I'll be in Texas, so I will probably be looking at it on television.
Okay, so you were, of course, a former presidential candidate. What do you think so far from what you've heard from Mr. Trump about his plans for the beginning of his term?
Well, it's hard to dissect, as many people have discovered, because some days I hear one message and other days I hear a different message. But what I think comes through, generally speaking, is that there's going to be a lot more spending. It doesn't sound like he's bashful about spending. He doesn't seem to be very concerned about the deficit. And with this massive increase in infrastructure as well as the military, I think there's going to be a lot more spending. I think the debt is going to be much bigger. I think that'll put more pressure on the Fed. I think there will be more monetizing of debt. And everybody has to think about, what generally comes about when the economy is manipulated by the Federal Reserve. You have good times, and then you have to have bad times to compensate for the artificially good times. So we'll have a downturn, and then that will be a real challenge for the new administration.
And so one thing that's being discussed a lot here on CNBC is the idea about border adjustment tax as part of the GOP plan that was presented over the summer that looks like it could be at least more of a consideration with President-elect Donald Trump. What do you think about the border adjustment tax?
Well, I wonder why they switched the term. It sounds like it might be something like a tariff, and it is a tax. And ultimately, taxes go on to the consumer because, some from the progressive side of the aisle, they always want to raise taxes on the business people. They make too much money. But all taxes, all corporate taxes are passed on to the consumer. Otherwise, the businessman gets put out of business. So I think that no matter what you call it, a border tax or a tariff, it's injurious, not only because it's a tax on the people and their standard of living goes down because of that, but it invites retaliation. And it's amazing, if you go back 5 or 10 years, and still there's a lot of people who deal with the financial markets in a practical way as well as a theoretical way, that tariffs aren't good. That free trade is better than taxes. But of course, what Trump is trying to correct is not the excesses of free trade. What he's trying to correct is the artificialness of the planned economy. With WTOs and NAFTA and all these things, that's not really capitalism and free trade. So I think that right now, I'd fear most of the retaliation plus the burden is going to place on the consumer.
And that is certainly a topic we could have segments upon segments on, but we do want to move on quickly and just ask you one last question. We know that you've been a buyer of gold. Are you still a buyer of gold with President-elect Trump taking office officially tomorrow?
Yes, I would still buy gold. I'm not, literally ready to, call up somebody today. But I think gold I have a hard time believing it's ever a bad investment for gold, although I know gold goes up and sometimes it goes down sharply. But right now, I think it's a pretty safe bet to buy gold. But I do think that silver is better. I think silver, for various reasons, have been in the doldrums, and I still believe silver is money as well. And when you see things happening like they are in India and removal of cash as a possibility, I think people should be holding silver coins as well.
Thank you very much, Congressman Ron Paul. Really appreciate you joining us today with your perspectives on everything from President-elect Donald Trump to gold and silver. Thanks so much. Jim, if I can jump in with you, how are you trading gold or possibly even silver as well?
I like gold. Gold's been on a kind of a roller coaster with comments from Trump and comments from Janet Yellen. I think we could pull back in the short term right here. A couple dollars below here at 11.96 in the Feb contract. I think it's a spot to sell it with a target 11.76 on the downside. Trades back above yesterday's high, about 12.07 is where I think is a spot to stop yourself out. Because it comes down to two things. Donald Trump's talking down the dollar. Janet Yellen's talking about hiking more. The question is, whose rhetoric are you going to believe more? I'm going to go towards Yellen's more in the short term.
Courtney, I think Jimmy's going to be okay on this trade due to the time factor. This is futures now. It's a short-term trade. I am still bullish on gold as well as commodities in 2017, but short-term here, he's danced between the raindrops. On a technical perspective, we look to back and fill down at 11.75, but I think it's all about the dollar. The dollar has relented. Will it relent through the inauguration? Maybe so, and then you're going to be okay.
One thing to put on top of what Congressman Paul said, too, he talked about border taxes and he talked about fiscal spending, but he didn't talk about the third thing that markets have been looking at, and that's that they genuinely believe in the pullback of regulations and the lowering of taxes, particularly things like capital gains.
That's all not happening on January 21st.
No, well, there could be some regulatory things that are pulled back in the first couple days. Remember, there was a lot of regulations that were put in with the pen.
Surprising.
And if it happened, we could see some thoughts of inflationary things if that begins to happen.
There certainly is a lot to consider, but before we move on and think about all of those things, Jim, I can't let you get away without giving us your risk reward for that gold trade.
If you sold it at 11.96 on a stop in, remember this is below, and it traded down to 11.76 and you got out, you make $2,000. If you're stopped out at 12.07, you lose $1,100. It's $100 per 1.0 tick in the gold contract.